Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have my great friend, my great pal. He is the mastermind of this whole operation, Mr. Al Connickson. Al, how the heck are you doing today?
You know what? I feel really good, Josh. How about you?
You look good. I mean, you must be on that new diet like you said last week.
Yeah, when do you get your new glasses, by the way?
I get them next week.
Things may be different next week then.
You doing good today, Al?
No, I'm doing really well. I feel great.
Good. It's always great to be back, helping our Retire Young family make these better investing decisions. And now that's what we do on this, this hour of trading and investing. We talk about how the financial markets really work, but also how us as the average investor, or we should say the public, can also participate. And when I say participate, that's like an institution. The institutions move and run this market. And that's what we're going to cover today, is how these institutions are moving this market, but how can we trade like them? So before we do that, Al, I want you to kind of recap what's happening in this market, economy, what's driving some of these great moves that we're seeing up and down. I mean, we're seeing some phenomenal action right now.
Yeah, we're seeing some great opportunities. This is a fantastic market, especially for traders. But, we're seeing it's almost like the market's on a trampoline. We see these huge up moves and then these huge down moves. And it's kind of a push and pull tug of war between the stay-at-home stocks and the opening of the economy stocks. And we'll see that for a while because, we've still got the coronavirus issue. We've got, the vaccines that are hopefully coming, and everything will work out fine. So
several companies, so that's a good thing.
Several companies, and every time we go through a crisis like this, new opportunities appear. So the key is to be ready to take advantage of those opportunities. How do you do that? How do you take advantage of market opportunities? Well, it starts with knowing what separates the pros from the amateurs. And why that's important is because the pros do well on a consistent basis. Amateurs, not so much. And the real key there is mindset. It's changing your mindset. It's reaching a point where no matter what's happening in the markets, you see opportunities that are there for you. You really should reach the point where there's no market condition that should cause concern for you. You're just looking at opportunities to your advantage, to use to your advantage, regardless of what's happening.
So what do you mean by that, Al? You mentioned it doesn't matter the market condition.
Correct.
The public, everybody thinks the market only goes up.
Well, for a lot of people that are in the market, that's all that pretty much has happened. And I think the feeling is there's a complacent feeling that the Fed will always be there to boost this market, to support it, to provide, kind of a floor for this market. And they have been doing that. They've been pumping a lot of money into the market. Interest rates are virtually zero. That's a great combination of things for the market, but that's not always going to be what happens. We go through these different scenarios. And right now, things have been done are being done to kind of help the economy make it through this crisis. But you have to understand that you can't control the market, can't control what it's doing, but what you can control is your mindset, which is going to help you control how you react to it. And it starts with this. It starts with accepting the fact that the markets don't just go up. They go down, and they go sideways. And you need to be aware of the fact that there are strategies for all three directions. So this is a good time to ask yourself this. Do you know what they are? Do you know what the different strategies are for participating in all three directions? If you are in the market, if you have stock or you have mutual funds, you actually are participating in all three directions. It's just not to your benefit. Typically, for most of the people listening to the radio show, Josh, they're in a portfolio that will only benefit them if the market or the assets go up in value.
So I'm going to cut you off. Let me ask you a question now. The market has been going up, and people's portfolios have been going up.
Sure.
What are some of the things that they're missing out on? Because in those mutual funds, do they perform the same?
Well, no, that's the key. And in these opportunities, in these market opportunities, that's where you really want to take advantage of every dollar that you have. I mean, maximizing the potential returns, making sure that any profit that you might have stays with you. And that's a concern, I think, when the market is at record highs, at some point in time, it may continue to go up for a while. It probably will. But at some point in time, there is going to be a correction, which is a normal thing for a market, for any financial market. It's a healthy thing. We go through these typically over time. On average, every 11 months, we have a 10% or greater drawdown in the market. We've had several this last year, the last couple of years, but that kind of weeds out the weaker companies, gets the values down to what's more of a fair value. So, the opportunities, even though the market is going one direction, whether it's up or down, there are ways of benefiting in a greater way with different assets and different strategies. And most people are only using one strategy. It's a buy and hold strategy. That's really what the emphasis has been. That's what people are taught. Just buy, put money into the market and hold on and don't worry about it. Well, that's not how you maximize the value or the benefit of your investment dollars. So understand that you can participate to your benefit in an up market, down market, and a sideways market if you know and you utilize all of the different strategies that are available. It's the opportunities that are there. And by the way, no one is ever going to be 100% right, and the pros know that too. So accept that fact right away. You're not going to be right 100% of the time, but you learn how to manage your winners and losers. That's how people benefit in these markets. You're looking at maximizing your returns, minimizing your risk. And then the key is to develop an edge. That's something that increases the probabilities of you being right. And then also part of that is having the potential for profits that are, that kind of meet your expectations.
Al, the crazy thing, I mean, the markets have gone up over time, that they're designed to do that. But here's a question I want everybody to ask them. If they're in this buy and hold or buy and hope strategy, is it enough?
Yeah, and the other thing, though, the investors, the public is not necessarily getting those same returns as the market.
Exactly. That's why you got to ask yourself, what can I do differently? What are some opportunities that I'm missing out on? Al was talking about the markets have three directions. The public is missing out on over half of these great opportunities in these markets because they're just in an up moving position or strategy. So, Al, you talk more about these multiple directions, opportunities that the public is missing out on that we have access to. The institutions are doing these. Why don't we? Why don't we trade like them? And that's what we kicked off the show, is trading like a bank or institution. Al, we got a big show on tap here. I want to talk more about the smart money, the institutions, how they're trading multiple assets and how they're doing that with income potential. And all these strategies and techniques are also available to us. This is Josh and Al with the Retire Young radio show. We will be right back.